Hey, YouTube viewers of the Arts Council of New Haven. It is your girl, Amber, the tax lady of Whitehead Tax and Financial Services, LLC, where my mission is to teach you, the entrepreneur, how to maximize your tax deductions by using everyday spending to create the lowest tax liability out there, legally, of course. All right. I am also an IRS enrolled agent, where I'm able to represent you before the IRS if you are in audit, and or if you have all this tax debt and you just can't sleep at night. I'm your girl. I'm also a Profit First professional, where I help small business owners implement that system in their business so that way they are able to make data-driven decisions with their income. All right. So today's topic is we're going to talk about business deductions and just a high overview on what you need to start doing now that you have your business. Hopefully you caught the previous YouTube video earlier when I kind of went through all the business structures. So if you have not watched that, feel free to jump back in and watch that video as well. All right. So what now? You have your business. You made your first dollar. Now you have all these expenses, right? What do you do? All right. My favorite phrase is, now that you are a business owner, you are now a walking tax deduction. You just have to change how you think about your spending, right? As I said earlier, my mission is to teach you how to use everyday spending, right? So when you are at the checkout or you're on online shopping and you're going to hit that submit button, you may want to ask yourself and keep asking yourself, am I buying this for the business or is this personal? And if it is personal, is there a way to legally categorize some of it as a business expense? I don't care if it's 10%. I'm all about let's not leave any money on the table for the IRS, right? The tax law for self-employed and investors is written in such a way for us to maximize the system. It is not, the tax law is not geared towards wage earners, those who are working 9 to 5s. It is written strictly for the self-employed, the business owner, and those who are investing, whether that's stocks, whether that's real estate, crypto now, whatever the case may be, the laws are designed for us. So why not maximize that? All right. But the only way you can do that is when you either have to educate yourself on what expenses are out there for you, or you may need to hire a tax person that understands your industry, right? Now, I know some of you are loyal. You've probably been dealing with the same tax person for the last 10 years. They're a family tax person. They do everybody in the family taxes or whatever. But you may want to break away if they do not have any small business tax knowledge, right? Or if they're not willing to learn. So you have a primary care physician. You go to your doctor every single year. Hopefully, when you go to your doctor's office, he's like, oh, doctor, my heart, I feel something in my heart. He or she is immediately going to refer you to a cardiologist. Why? Because that cardiologist specializes in the heart. Your primary care can only take you so far when it comes to your heart condition. Your cardiologist has to take you the rest of the way. Same thing when you are a business owner. If you are dealing with a tax person that does not understand business taxes, they can only take you some of the way. You need someone who really understands your industry, especially if you are in real estate. The real estate tax laws are complex. You do not want to put yourself in a position where you are leaving so much money on the table and you are not using the tax laws to your best benefit. All right. So definitely make sure you hire someone that is in line with you. All right. Also, stop doing it yourself. I know there's tons of do-it-yourself software, but when you enter the self-employment realm, you need to stop. These do-it-yourself softwares are not designed to really help you. Yeah, they'll ask you little questions as you go along the way. But prime example, I'm actually doing an audit for somebody who did it themselves. I won't mention the do-it-yourself service, right? But now he's getting audited by the IRS because he claimed $40,000 in home office expenses and like $30,000 in auto expenses. Why? He has 2 businesses. So as he was going through the software was like, do you have a home office? Yes. Okay. Second Schedule C, do you have a home office? Yes. So he was duplicating. When I saw his return, I said, you are duplicating your expenses. That's why the IRS is like, because no one has $40,000 in home office expenses. Like, that's unheard of, right? So that's why. And so he didn't know anybody. He was like, I was just following the prompts. And if you are that person that's just following the prompts, and because you think it's cheaper, it may end up costing you more in the end, because now you have to find someone like me to help you get out of that audit situation. All right. So just be calm and be good. Also, you must spend money with intention when you are spending money for your business. Be intentional. Every dollar should have a job. Just because you have $10,000 coming in doesn't mean you should go spend all $10,000, right? You want to make sure that the money you are spending gives you some type of return on your investment, ROI. Because if not, then why are you even purchasing it, right? Granted, there's certain things that you have to have in your business. If you need a space, you got to pay rent. You got to have software. You got to pay for Microsoft Office products or whatever the case. And so there's certain things that you need to have in your business in order to make your business function. If you didn't have it, then you can't get any money and you can't get any customers, right? But I'm talking about things where you may not necessarily need to buy. For example, I'm talking to creatives, right? Some of you may like to design your own t-shirts and things of that nature. Do you really need to spend money on another heat press? If that heat press costs $500, you should at least be making $500 or more in sales from it. If not, it's just sitting in your basement collecting dust. And you didn't benefit from it, right? So make sure you are getting return on your investment. Now, return on your investment does not necessarily have to be a tangible thing. It could be intangible. So there's going to become a certain point in your business where you can't wear all the hats. You may need to hire a bookkeeper. You may need to hire an admin assistant, right? But hiring those people frees up your time so that way you are able to focus more on the business. So that is your return on your investment on that, is you now have more time in your business. All right. I also find that I have people come to me because it's the end of the year, like, oh, let me just go out and just buy all this stuff because I need some more deductions, right? That's not how it works, people, right? You may go out and spend $20,000 of unnecessary things and you're thinking you're going to get that nice huge refund and you're going to be winning. Yes, we're going to take that $20,000 of expenses dollar for dollar, but it's not dollar for dollar when it comes to refund. It only affects your liability, your tax liability. Now, depending on your tax bracket, that $20,000 you just spent may just swing your tax liability $2,000 to $3,000. Is it really worth it to spend all that money to sway your liability $2,000 or $3,000? It may not be for you, right? So again, be intentional with how you are spending your money on an everyday basis. All right. Now, documentation. Documentation is so key. You must record everything, right? Put notes on it. I don't know if you're anything like me. I don't remember what I did last week. IRS can come. We just finished filing tax year 21. The IRS can come to us in 2025 and want to look at our 21 return and our receipts. I don't remember. But you come into you're getting audited and you got your bag of receipts or your shoebox of receipts and they're all smudged. They're all faded because they fade over time. So get in the habit of making your receipts digital. There's tons of tools out. There's tons of apps. You can just take a picture of it or just use a regular camera and save them that way. But a more effective way would be now when we go out to, the checkout, they always ask you want the receipt emailed? Saying yes. So now when you go home, you can create little folders, Staples, Walmart, Amazon. So now when those receipts come through, it's going to go into that folder. Now, the only thing is at the end of the year, you probably have to sort through like the junk mail part of it, like the promos, coupons and stuff like that. But at least you have a digital copy of your receipts, right? Or use a vendor like Amazon for like your office supplies or whatever. Because why? You can go into the Amazon website and pull all your expenses for the whole year. And you can sort through and find out this was business, this was personal, and that's another way to do it as well. Right? But if you have to have a paper receipt, make sure you write on there. I went out to eat with Joe Bob to discuss networking opportunities at Red Lobster. Or when you're keeping track of your mileage log, I went to a networking event, right? All those things, you have to put as much information as you can, at least to jog your memory. And I know you're like, well, why I gotta do all that? I got my bank statements and I got my credit card statements. Yeah, but what shows on your credit card and bank statements? The vendor and the amount and the date, right? As you know, we can all go to Staples, Best Buy, Amazon, and buy personal stuff, right? So how does the IRS know that you truly was buying business related stuff when your receipts are all faded and you have no proof, right? There's no way for them to tell. And I don't care if you only just using your business account, because let's be real, people. There's times when your personal account is looking a little funky and you may be tempted to use your business card to buy whatever because you don't have the funds. And again, you shouldn't be doing that, but I understand things like that happens. And that is why the receipts are so important versus just trying to use your bank statements and credit card statements. It's not enough, right? Now, the IRS is not there to make your life miserable, right? There are concessions for when you don't have supporting documentation, right? But you just can't make it a continuous thing, because it's almost like when you have a child and they do something wrong, like if it's their first time doing it, you'll be lenient with them. You're like, okay, you didn't know, but next time you do it again, you're going to get punished. So that's kind of how I deal with my clients, and also how the IRS deals with clients too sometimes, is that if you truly was of ignorance, sometimes they will allow concessions or whatever, like, okay, but you just can't make it a continual habit. All right. Now, speaking of audits, right? No one should be afraid of an audit, right? Nobody. Because if you are on an up and up and you are doing what you're supposed to do as a business owner, you're keeping your documentation or whatever, let them come. It's no different than when you have to prepare for exam. You just don't show up on exam day and expect to pass and you didn't do any preparation. It's the same thing with an audit. If you do things on a daily basis, you'll have everything that they will want from you. Now, how does someone get audited? Like, how does that happen? So there's a couple of ways. Sometimes it is totally random. I'll make it, this is not a real example, but they can say, hey, every 10th return, we're going to flag. Every 7th return that has this type of credit, we're going to flag. It could be just as random as that. 2, it can be you're not consistent. Maybe you haven't filed taxes in like 5 years, but now, we just got through with the SBA and PPP. Now all of a sudden you filing your tax return. That's going to make the IRS think, wait a minute, what happened the other 5 years when you wasn't filing? Like you just made this business just now, right? So things like that. Or the flip-flop of filing statuses. 1 year you had a household, another year you married, joint, another year you married separately. IRS is going to be like, what are you doing? You can't go from head of household to married filing joint to married filing separately and then repeat the cycle. Who gets married often? I don't know. Maybe people do get married like that. But that can be an issue too because of consistency. And I'm not saying that you can't go from married filing joint to married filing separately, because people do that all the time. I'm saying go from a whole totally different filing status to a married filing status, and you keep alternating that. You're going to get flagged. The other thing is, you must make sure you have the right NAICS code on your tax return, right? You can go to the NAICS website, figure out what your industry is, and there's, I think it's 8 digits that you need. That goes on most of your tax returns. It definitely goes on the Schedule C. It definitely goes on the corporation returns, right? Hopefully your tax person is just not putting a generic number in 9999. They really shouldn't be doing that. They should really be trying to find out what your NAIC code is, because the IRS uses that as a benchmark. So the IRS has tons of data, right? They know what your industry is. They know how much income your industry typically makes, what expenses are. So I'll use myself as an example. Let's just say I make $100,000 in my business and I have $30,000 expenses. That seems about reasonable, right? But if I say, hey, I make $100,000 and I have $200,000 of expenses, wait a minute. According to the IRS historical values and research, I done messed up with the algorithm. So therefore, I'm gonna get flagged because they know, how can I make $100,000 and have $200,000 of expense? Where's the other money coming from? Am I not reporting all of it? Did I take out a loan? Did I win the lottery? Whatever the case may be. IRS wants to know, how are you able to double your expenses on the income that you make? All right, so that code is very important, and that is why you need to make sure that you accurately get the right code for you. All right, so now I kind of just talked about, best practices of what you need to do going forward. Let me just talk about a couple of deductions that I find that often go missed, right? So one of the big ones is professional development. People forget this all the time. And as I'm going through this, I'll also show you ways on how I can start you to start thinking about making personal expenses legally as a business expense, all right? So, but in professional development, that means books. So if you buy self-help books, you buy books to learn how to draw better, or, how to use your camera better, or you're going to networking events, seminars, or you take a class, that's all considered professional development, right? But I know you're going to Barnes and Nobles, you're just buying all these books and you're not even using your operating expense, you're using your personal account because you don't realize that that book can actually help you in your business. Here's a big one, audio subscription plans. I'm not an audio book listener. I gotta have an actual book. I need to flip pages. But many of you have audio subscription plans. Sometimes you listen to business audios, sometimes you listen to leisure. Now that's when you have to kind of go through and see how much is leisure, how much is business, get that percentage, and now if it's 75% business, now you can take a 75% deduction of your audio subscription plan, right? But just make sure that you're being honest with yourself, because again, if you get audited, IRS is going to want to see. And if they see you only got 3 business books and you got romance book here and mystery book here, where's the 75% at that you told us, right? But that's how you have to start thinking, how can I use some of these personal expenses that I have and use them to my benefit in my business, all right? Another big one that people miss out on is miles. I don't know how many times I talk to my clients and like, what's your mile? I don't know, I didn't keep track. What do you mean you didn't keep track? That's one of your biggest expenses. The mileage rate is 58.5 cents. But I don't know when you're gonna be watching this YouTube video, but if you are watching it and we are in 22, tomorrow, July 1st, 2022, the IRS has increased the mileage reimbursement to 62.5 cents per mile to help us with this whole gas situation, all right? So if more than anything, this is the year that you really wanna focus on keeping track of your miles. There's too many apps out there where you could just set it on auto enable, and then when you get home from the night, classify it. Was it personal or was it business? Don't lose out on that. And then don't be the ones that say, oh, I drove 10,000 miles in a year, just split it 50-50. Because if you get audited, I have a slight feeling the IRS is going to want to see 2 separate logbooks. They're going to want to see from January to June, July to December. They don't just increase things for nothing. When you see new tax laws that's to your benefit, you must keep in mind, I need to keep really good documentation of this because this is new and this is something that they may want to audit on my return. All right. Especially if you have a home office. What you don't realize, when you have a home office, every time you get it behind the wheel of your car, it's going to be a write-off for you. Right? See, I don't plan my day without knowing that before I get in my car that I'm not going to be able to write those miles off by the time I get home. Granted, yeah, there's going to be some days that 100% of my day is all personal. But if I'm doing anything business related and I have a home office, you definitely want to keep track of that more so than anything. All right? Hiring children, right? Many of us have children that are under the age of 18, and we just giving them allowance money because they cleaning their room or they washing the dishes, right? Stop it. End it. Put them on payroll. Hire them. Now, I'm not saying you hire them and they still cleaning their room. You have to hire them and they still have a legitimate task in your business. They have to be helping you in your business. So you can't just wash dishes and then pay them a check, right? Everything has to be done in a certain manner. So you need all those details before you even think about putting your child on payroll. But you can literally pay your child up to 12 grand. They don't have to pay taxes on it, and you get that full 12 grand if you can legitimately pay your kid 12 grand. If you have a 5-year-old, is it realistic that you can pay your kid 12 grand? I doubt it. Unless we have creatives here. Maybe you have a clothing line that's dedicated to children and you want your child to be the face of that clothing line. Now they're considered a model. So now whatever kid models get paid, that's what you will pay your kid. So in that instance, maybe you can pay your kid a 5-year-old 12 grand. But like I said, you have to look at every situation. Every situation is going to take something differently. But here's a hot tip. What you should do is, as the parent, once you pay them, take a little bit of that and open up a custodial Roth IRA for them. So say if they're 10 years old, by the time they graduate high school, they have a nice nest egg that they can take out tax-free because it's been sitting in there for 5 years. Can you imagine what your child can do with that kind of money? They can probably pay for college, maybe buy an investment property, maybe buy their first home or invest in a business. You know, you should be teaching your child right now good financial habits. So that way when they do come into that type of money, they just don't blow it and they lose their mind, right? So be intentional. It's all about being intentional, all right? Meals. Meals is another area that the IRS looks at. So you can't just, because you have a business and you working late at night and you're in your home office and you're eating a burger, it's not a write-off, right? It's every day. You don't have anybody in front of you. But what if I'm doing a tax return virtually and I'm having a Zoom meeting with my client and I'm eating? Now, see, that's why I said you have to ask yourself and plan this stuff out in advance, right? So that way you can legitimately have that expense as a business write-off, all right? And just make sure you always write on there the purpose of the meal, who you were with, things of that nature, all right? And I want to just throw another hot tip out here for creatives. Another way that you can exercise everyday spending. If you are an aspiring actor or an actress, take advantage of going to plays and going to the movies, because that's a write-off for you. Why? Because your purpose going is to see how other actors or actresses act. What things you can pick up to implement into your acting ability. Right? How does that person cry so fast? Or, what's that tone that they're using to, those are the type of things that you can take back watching those movies and things of that nature. Or if you're a videographer, you want to know the different, I don't know the terminology, but the lighting and the speeds and, all those type of things that will benefit you when now you are recording somebody's wedding or their music video or whatever the case may be. Right? Another one, if you are an artist, you like to paint, you have paintings, go to these art galleries. Why? It's business deduction. Because you're going to see how other artists use the stroke of their paintbrush. You're looking at details so that way you can take something back and make yourself a better person. All right. So lastly, be intentional. Know your numbers, people. You must become intimate with your numbers. If you, like I said earlier, if you got $10,000, you should not be spending it all. Because how do you know, if you're not doing your numbers, if you can hire, if you can buy that building, or whatever the case may be? That is why a lot of businesses fail. And if you are not on that, I'm sorry to say, your business will fail too, because you don't know your numbers. So be intentional with it. Concentrate on your return on your investment, and you will be good. And if you need any more, I do a strategy session where I kind of deep dive into how to take vacations and make it a write-off, how to have, parties at your home and make it a write-off, things of that nature. So feel free to reach out to me. I'm at whiteheadtax.com or amber@whiteheadtax.com, or Instagram, Amber the Tax Lady, Facebook, Whitehead Tax and Financial Services. All right. Thank you and have a wonderful night.